Okay, this last section that we're going to be looking at is on tax. So it's tax in relation to business, but we will also look at how this fits with personal income tax as well. I don't know why I drew that. Anyway, so there are a number of ways that a business can be structured, and this then influences the way they get taxed. You can be a sole trader, which might be just one person by themselves. You can be a partnership. Can have up to 20 people in a partnership, or you can be a company. And when you're a company, there's a whole lot of complex rules and things that need to go with that to form that company. So we'll only be focusing on these two at the moment. Most companies are limited liability. It means that if something goes horribly wrong, they're not the directors aren't responsible for that kind of stuff up, and they don't have to pay for it. If it's a sole trader, something goes wrong, you've got to pay for it. So that's probably a bit of the difference. With taxation, your taxable income is your assessable income minus your allowable deductions. All this means is that sometimes you can have expenses related to your business that you can take away from your assessable income, which means that it reduces your taxable income, hence you don't have to pay as much tax. So that's why you've got to keep all your receipts and all those kind of things so your financial transactions are clear, and you can actually use that to reduce the amount of tax you've got to pay. Now, the Australian Tax Office will put out a table every year that works out the kind of tax you've got to pay, and it kind of changes as things go around because they change the tax brackets a bit. But basically, if you earn more than around about $15,000, you have to pay a Medicare levy. So that you pay a percentage of your income, and that goes towards Medicare, and that covers the hospital and things and bills like that. So you can actually go to hospital and helps with public health. The other thing is that if you own over $50,000, then you should have private health cover. Otherwise, you have to pay more for that as well. So most people take out private health cover so they don't have to pay an excess. The last thing is, over here, your first $6,000 of your tax is always tax-free, regardless of how much money you earn. So it's called the tax-free threshold. The first $6,000 you earn is tax-free on the first job you have. If you have multiple jobs, you can only claim the tax-free threshold once. Now, there's a couple of ways you can do tax, but I kind of look at a really easy way. I use the take times add method. Okay, so you look at the tax table, work out where your income falls, go to the right hand side, take the first number, multiply the second, and add the third. That's it. Then you work out the Medicare levy, add the two together, and that's your answer. Let's have a look at an example, and I'm sure you'll find it very easy to do. Let's say that this is a tax table, which is our current tax table. The process is the same regardless of what numbers are in the tax table. You will be given one in an exam, and you'll be given one in a test, so you don't actually have to write it down or put it in your cheat sheet. So let's have a look. You've got a $48,500 income, and you've got private health cover, and there's a 1.5 Medicare levy. So how do you work out your tax? Well, your taxable income is $48,500, and then you come across here and you have a look to see where that fits. Is it over 6,000, over 37,000? Oh, it's not there, so it's got to fit in there. Okay, 48,500. So now you come scrolling across. You take the first number, 37,000. Then you times by that, take times 0.3, and then you add 4650. Take times add. Okay, take times add. Very simple. Just make sure you do it on your calculator properly so it works them all out in steps, otherwise it gets a bit confusing. When you do that, you'll end up with a grand total of $8,100, which is the tax. But now you've got to add Medicare. Okay, and your Medicare levy is done on your complete taxable income, so it's $48,500 times by your Medicare levy, which in here is 1.5%, and that will give you a grand total of $727.50. Now what you have to do is you have to add those two together to get your total tax payable. Your total tax payable is your Medicare levy plus your taxable income. So if you go $8,100, add the $727, you get $8,827.50 is the tax that you'll have to pay. Okay, so it's take times add, and away you go. So that's how you do it for an individual. How do you do it for a business? Let's have a quick look at that. Your business, say you've got a business of 130 that gets $137,000 coming in, and you've got a partnership. So what you do is you decide to split the income with 60% going to one of the partners and 40% going to the other partner. And so what you happen is you split that wage and then you work it out as per normal. So what we've done is we've split 60% of 137. We will get $82,200. The amount of tax we'd pay by doing take times add will be $18,364. And if we work out our Medicare levy by doing 1.5% of $82,200, you'll get $1,233. That's your Medicare levy. That's pretty cool. And then you need to add those two together, and that means 19597 is the amount of tax that this partner has to pay. This partner here has to pay 19597. On the other side, the 40%, you get $54,800 is the income they get. The amount of tax you have to pay is $9,990 using take times add. And then the Medicare levy will be $822. Add the two of them together and you'll get $10,812 and cents. And then what you do with that is then you add those two together to get the total tax that they'd pay together as a business. And at that they'll have $4,009. Alright? So that gives you how much tax they've got to pay. So they split it and then they go take times add. As long as you remember take times and add from that table, you really can't go wrong with calculating the tax, and then you add Medicare. Once you've done that, it's all done and there's not much more you need to do, and you've worked out tax for a business.